So I remember this conversation very vividly in my mind with my younger brother. He told me one day saying, why is it that my returns are always lower than the fund returns? I told him it's not because the fund is bad, it is because you need to work on something called behavioral gap. In this video, I try and talk to you about that particular gap, and that is one hack which can actually help you to generate lot more return than the fund itself. Please do watch the video till the end. Years back, Carl Richards came out with a phenomena called behavior gap, which is an important phenomena in investing. It is nothing but the difference between investor return and investment return. Let me now tell you what is the primary difference between these two. Investment return is nothing but, let's say you invested into a certain fund, for example, XYZ blue chip fund. You invested in lump sum or you invested it over a period of time via SIP. This particular investment would have grown over a period of time into something substantial. That is what I call as investment return. Now, what is investor return? During the same period where you actually were invested, you did a lot of moving in, moving out of the fund because of various reasons. The reasons could be that you are worried about the markets. The reasons could be you thought there'll be a big crash coming forward. There could also be the reason saying that this fund in the last 6-7 months has not been doing very well, or you could have identified some other opportunity. These could be the possible reasons why you exited that fund only to realize that this very same XYZ blue chip fund now has started performing better and you invested back into that fund. So net over a period of time, you would have made a certain return. This is your return, which is nothing but the investor return. Now, very recently, Axis Mutual Fund came out with a very nice research report. It clearly, vividly mentioned that their returns on equity funds or equity and debt funds are a lot more than what their own investors have made. The link to the article is in the description below. In this particular research report, you can very clearly see that your return as an investor from that XYZ fund is actually lower than SIP returns and also lower than lump sum investment returns. And this is across time frames. This is not shocking for me primarily because investment is not just about managing your money. It is a lot more about managing the money mindset. I'll talk about that in my next section. In my opinion, if you could take control of your behavior as an investor while investing, I think you have the ability to produce larger or more return than your existing investments itself. That is the reason why I always insist, please select a good financial advisor or an investment manager to manage your portfolio, because his or her role is not just about picking the right investments, but also managing the journey of your wealth creation. This particular hack definitely can help you reduce the behavior gap. I hope you like this video. Thanks for watching. Happy investing.